Hello YouTube family, welcome back to another Ruslan G YouTube video. In today's episode, we're going to be talking about a company that a lot of you have actually requested to see on the channel, and that is XPeng. And we're going to talk about the company itself, we're going to talk about the valuation, we're going to talk about their products, their financials, and pretty much everything that you want to know if you're either thinking about investing or maybe you're already invested. And if you like content like this, don't forget to smash the like button. And if you like making money, investing in general, finances, anything like that, you should subscribe. I'm telling you, you will not regret it. And without any further ado, let's roll the intro and let's talk about XPeng. Let's go. All right, XPeng, here we go. Let's talk about the stock price a little bit first. And as you can see, it's hovering around the $30 ballpark as of today, and actually has been as high as a total of $72, actually back in November 23rd of 2020. And if you see here, it came onto the market around 18, 20, 22, somewhere in that ballpark. And it also had, obviously a little bit of price action here, up and down, up and down, up and down, and then finally rallied. And then now, officially, we're in that 30 ballpark. So that's kind of the history of its stock price. There's not much to go off of since it virtually came on the market in August of 2020. So if you would have invested at the beginning of when it came onto the market, you would be up around 45%. Not too shabby. And obviously, if you timed it perfectly, which none of us time anything perfectly, right? We're not Nostradamus, Aristotle, we're not in the game of predictions, right? All we can do is the due diligence. We can study as much as possible, but at the end of the day, we still don't know whether it's going to go up or down. But I think I'm going to give you guys some clues as we go through this video as to where the stock price is. And honestly, I'll share with you exactly where I would buy if I was thinking about adding a position to this company. Now, I don't currently own any XPeng, just to be clear with you guys, but I had so many people ask for me to do this video that I thought I would share with you guys my opinion. I do own a lot of other EV plays, a lot of other tech growth companies, and I think this is one of those, but it is important to know the risks and the rewards with this company if you were thinking about entering or if you already own this company. So let's talk about their financials just a little bit, and we'll get into a little bit deeper of their financials, but let's just talk about their financial performance. So in 2018, obviously, they really just lost a lot of money here. They didn't really bring a lot of revenue. They had $9.7 million in revenue back there. 2019, on the other hand, they bumped that to $2.3 billion. And they lost about $3 billion. So they're burning a lot of cash here in 2019. Now, they cleaned that up in 2020, as you can see, negative $2.7 billion in net income. So from 3.6 to 2.7, not too bad. And then also from 2.32 billion in revenue all the way up to 5.8, we'll just call it 6 billion in revenue. So really, really good when we're looking at a growth standpoint. I mean, if you look here from 2018 where there's no green, right? Essentially, it's so small that it's not even worth mentioning here. And to go to 2019 of 2.3 billion and then pretty much doubling that and getting to almost $6 billion in 2020. That's a pretty good feat. Now, we don't know what quarter one of 2021 looks like, but we do have an idea of what that might look like if they can keep up this growth from quarter three, quarter four, and into quarter one of 2021. We'll have to see. Again, we don't have that data yet, but I'm excited to see what they're able to come up with. And honestly, this is something that you should be paying attention to as we get closer into the next month. Now, XPeng, let's look at their actual cars because that's what you're investing into. It's a car company at the end of the day, right? It's a EV play. And here we have G3, this is one of their cars. It has X-Pilot, auto parking, AI, which voice interaction, if you guys don't know, NIO also has a little bit of voice interaction. Teslas have, I would say, not the best voice interaction, but it's there. And then they also have 2 safety verifications, but we're gonna go down, scroll down a little bit, and you guys are gonna see these are just retail price. Obviously, this is in yen, so you do have to translate it. And if you want to translate any of the currencies that we're gonna be talking about today, here's what the yen actually equates to. So $1 equals 6.52 yen. So if you see yen on the screen, you just want to divide that by, to get the dollar amount. So if you're seeing 150,000 yen, you divide that by that 6.5 figure. And that's going to be a rough example of what, the cars cost. We're going to look at numbers as well. So you can kind of do that math in your head. So remember, this is in kilometers, 520 kilometers driving range. 30 minutes of charge time from 30 to 80%. It's a CATL battery and IP68 waterproof and dustproof, which, just standard. This is something that you just need in every car, right? And then you have X-Pilot, looks really sleek. and as well as, their smart in-car intelligence system. This is looking similar to what Tesla has as far as, capabilities go. So nothing too fancy, I would say. I really wonder how good their audio functions are as far as, integration between software and the individual, right? The ability to speak to your car and for it to do functions is really, really important. And I think the better that is, the likelihood that people will choose this, because that's kind of where we're going. Audio is very, very huge, from podcasts to even social media apps. We can see that things are moving to audio. CNCAP 5-star safety standards, which Teslas have virtually 5-star, if not pretty much 6-star safety standards. So this could have a very similar design here. And they talk about supercharging, nothing too fancy. I also want to look at the other car, because they don't just have the G3, they also have what's called the P7. So the G3 resembles a lot of what a Model Y or maybe even a Model 3 might look like. Personally, I think it looks more like the Model Y. And when you look at the P7, this really reminds me of either Lucid's car, right? Because the front, the back, if you were to take a look at the back, it reminds me a lot of a Lucid, but also with where the cameras are and the shape of the car and the way the door handles are, it really reminds me of the Tesla Model S. And it also has some similar specs. Like their 706 kilometers is close to 430 miles. So not too bad for a car, especially that is rivaling, probably what looks like the Model S, right? Very similar design. And they have, dual engine, firmware, nothing too crazy here. If you take a look at here, hands-free parking, protection beyond driver and passengers, that's the XPilot safety. And pretty much what that means is autonomous driving tailored for China's road conditions, easy to drive, easy to park. They also have an intelligent cockpit in this car. What it is a command center beyond conventional definition. It intuitively coordinates your driving and smart mobility. Interaction feels natural and smooth, where the P7 helps you process your commands. A new world of experience awaits. Really clean interior. I really like this interior. I like the seats. I like what they've done with the metal console here. This looks exactly what the updated Model S, Model 3, Model X, they all have this. And also the steering wheel, very sleek. A lot more buttons, I think, than the Model Y or the Model 3, any of the Tesla cars, in fact. And then also I like the dual screen action here. I think that looks really, really nice. They also have the Xmart OS in-car system, which is your voice is your command. This is the in-car service and app stores will progressively improve, enriching your experience with each Xmart OS system upgrade. The P7's intelligence is evolving. So very similar to Tesla, right, as far as everything goes. The headlight is obviously more similar to Lucid, if you guys are familiar with Lucid, or CCIV as of current, but looks really cool. I really like this car. But next, I wanted to look at, could XPeng become the leader in advanced driver assistance systems driving? This is something that they need to do in order to really become, at least in China, right? At least in China, they need to do this to become a leader in the space if they really wanted to. And I'm sure a company of their size does want to become that. So XPeng. This is their executive summary. This is just saying, hey, their revenue is forecast to grow 35%. The revenue grew 151% over the past year. We kind of already saw that. And they're currently unprofitable and not forecast to become profitable over the next 3 years. And we'll look at exactly how long that's going to take. But let's look at the price to book ratio and their share price versus fair value. Again, share price versus fair value, they're saying that fair value is around $30 per share. That's what we're seeing now today, is about $30 per share. And so they are a little bit overvalued. This is taking into account, I think, yesterday's pricing. So $31.40, but in reality, this is kind of where we're sitting at now. So it's slightly still overvalued, but that's not a problem because most companies are actually overvalued in most instances. So is this a bad thing? I don't think so. I think this is a good indication of, if you're thinking about buying now or buying over time, this is a good place to get started. Again, not a financial advice, just something to be aware of. Now, future growth. This is how XPeng is forecast to perform in the next 1 to 3 years based on estimates from 11 analysts. So 64.7%. And as you can see here, this is just dating back from 2020 and then on and so forth, 2021, 2022, 2023. And we don't actually see full profitability until 2024. And really, the $1 billion profitability of earnings, right, net income, US dollars, of course, is close to December of 2025, right? We're seeing that 4.42 billion yen figure. And remember, the math we did is about 6.5. So if we're dividing that, it's close to, not quite, maybe maybe $800 million. But again, that is a really good sign when you're looking out. So this is a very, very long-term perspective. Again, this is taking into account a 64% growth rate. So if it slows down than that, it's obviously going to take longer. If it speeds up, it's obviously going to be shorter. So take that with a grain of salt. Make sure to just really pay attention to this, pay attention to what their growth rate looks like quarter by quarter if you are dollar cost averaging in, or if you already own a lot of this stock. Next, this is their balance sheet. This is something that I always like to look at the channel because this is really the fundamentals. This piece of information, besides their growth in the past and the future growth, this is something that's really important because do they have enough cash for a runway into the future? And this says yes, right? They say stable cash runway, XPEV has sufficient cash runway for more than 3 years based on its current free cash flow. And they're going to need it because remember, 2024 is when we see profitability and 2025 is when we see real numbers, right? Real big numbers start to come into play. And they obviously have not a lot of debt, 1.8 billion yen in debt, which equates to less than 200 million US dollars. And at the same token, their cash and short-term investments are $33 billion in yen. And if you divide that by 6, you're looking at roughly $5 to almost $6 billion in US dollar equivalent. That's a lot of money. They could literally pay off their debt no problem and still have a lot of equity, long-term assets, physical assets, inventory, all that. And I'm super bullish on that sentiment alone in the fact that, if they needed to pay off debt or if they needed to maybe wait another 2-3 years, before real profitability and they wanted to scale faster, they could do that. They have the money. And this is, again, not including any further investors, right? And that's something we want to look at too, is who is buying this stock, right? Who owns this stock? Well, ownership here, they said about 6 to 9 months ago, Alibaba actually ended up buying 50 million US dollars worth of this stock, which equated to about 6.6 million shares at the time with a share price of 750. So they were buying very, very cheap prices for XPeng, right? If we look back on the stock, we didn't see those prices. We never saw that cheap of XPeng. So they were buying as insiders versus, just as a corporation buying as soon as it comes onto the market. They were buying before it came on the market. Very, very smart. And another thing that I wanted to look at is their ownership breakdown. The reason why this is important, and this is something you should be vigilant of, is because if, for example, on this chart, you saw that, general public owned a small chunk and, public companies or private companies or institutions, they owned a giant chunk, like let's say 80, 90%. Well, that's something to be wary of because it's like, okay, these guys, might be in cahoots together and they might just all decide to dump their shares at the same time once they've reached profitability. And who are they dumping off to? Well, it might be the general public or individual insiders. But this one is pretty well balanced, which is what I like to see. As you can see, individual insiders 33%, general public 25%, institutions 20%, public companies 12%, and private companies 8%. So not too bad. This is actually a good sign. That means really at the end of the day, if a small chunk of these people, like let's say general public, all got a bunch of news articles that said, sell this stock, sell this stock, sell this stock, and they ended up actually going through with it, then, that might drop the price a little bit. But because they're not 80 or 90% owners of this particular stock, then it's not too big of a deal, right? Obviously, the price will fluctuate a little bit, but it's not as bad as, other companies that do have that type of ownership. So again, just something to pay attention to. I hope that brought you value. And if you've made it this far into the video, I have a few more things to show you guys. But don't forget to smash the like button if you've gotten value so far. That really helps out the YouTube channel. That 2 seconds that it takes you to do it really greatly helps out. And if you want to leave me a comment down in the comment section below right now about what maybe you learned so far in the video or something that you'd like to see in a future video, leave it down there. But next, let's talk about the share price. Where do I see their stock going, right? And I honestly could see them, trailing here, right? There is a little bit of support in this high 20s, right? 26, 28, 29 ballpark range, but I also could see if they break down below this level that they're at now, down below this $26.90 that they've had back here on March 8th. If you see that, I could see them retouch 20s, and I could see them retouch their, initial public offering when they came onto the market here. I could see them reach here, and if they do, this might be a grandiose buying opportunity because we've seen where the stock could go. Obviously, this was at the hype of the whole, EV craze. Right here was the real peak of it, CCIV, Tesla, and we're talking about Li Auto, NIO, big companies that really are centered around the EV space that came onto the market and, completely blew up in a good way, right? Obviously, for a lot of people that bought in these prices, they might have some bad sentiment towards the stock. They say, oh man, I'm down, 57%. But for a lot of people that never entered this stock at these highs or maybe bought down here, they might say, oh, look, I'm still up 50%, or I could be up 50% if I bought back here. If you're dollar cost averaging in, this is a good time to start because it might never get down to these levels. Personally, I think it will. But again, I'm not Nostradamus. I'm not a mad scientist experimenting with plutonium and trying to go back in time or anything crazy like that. But I can say that it is possible for these companies to cool off even more. Everything in the EV space is pretty hot-headed, especially, look at NIO. Look at NIO comparative to this company. This company is tiny compared to NIO's price action in the last year. And if we look at the 6 month, they're trailing really close together. In fact, in the 6 months that we're looking at, XPeng could drop closer to NIO's valuation. Obviously, NIO's up 30%, XPeng's up 55%. So those are all things to consider. Look at the industry standards. Look at the guys who are already at the very tippity top of the spectrum. Look at Tesla. Like, we can compare it to Tesla in the 6 months, and they're trailing right next to each other. Why is that? Well, it's because people are investing in the EV space. There's more ETFs that are centered around this, so more companies and organizations that are buying, chunks of every single company and putting it into a big pie, kind of like M1 Finance, but really for the corporate world, right? So this is all happening behind the scenes, and a lot of people are just not paying attention to it. But it doesn't mean just to go and buy XPeng, right? I'm not saying just to go buy it. If anything, I'm saying, maybe evaluate where this company could go, what your exit strategy is going to be, what your entry strategy might be. But let's talk about something that I think is going to bring you some value, because for those of you guys who don't know a little bit of XPeng's, I would say not quite dark history, but a little bit of controversies that I think is really important. So in July of 2018, the United States Department of Justice charged an ex-Apple employee for stealing the trade secrets of Apple's autonomous car project in an attempt to get a job at XPeng. So that was, no number one, right? Then in March 2019, right? This is just a little less than a year later, Tesla sued, I might pronounce this poorly, so I'm sorry, Cao Zhenzhi, a former Tesla employee, accusing him of stealing its autopilot source code and bringing them to XPeng. Zhao denied claims of intellectual property theft, but admitted to uploading Tesla source code to his iCloud account prior to leaving Tesla while he was still working for Tesla. In response to Tesla's accusations, XPeng launched an internal investigation and said it by no means caused or attempted to cause Mr. Zhao to misappropriate trade secrets, confidential and proprietary information of Tesla, whether such allegations by Tesla being true or not, and said it was not aware of any alleged misconduct by him. In November of 2020, so again, another year and a half goes by, it was reported XPeng had agreed and offered to provide a copy of its source code to a neutral third party to compare to Tesla's to prove nothing was copied. Neither XPeng or any subsidiaries have been parties to the original lawsuit. So this is a big deal because, here they're like, yeah, we didn't do anything, whatever. Like, there's no connection. We're going to launch our own investigation, right? This is like a classic example of like when Coca-Cola does like an anti-cancer study and they're like, we'll just run the experiments. And then a few months later, they're like, oh yeah, no, Coca-Cola doesn't cause cancer in anything, right? And again, that's not to take away from this point. This is just something to note that they're launching their own investigation against themselves at first. And they're like, no, we didn't find anything wrong here. And then in November 2020, they were probably ordered to do this. Or maybe by then they already had updated their source code to be a little different. And then they finally did end up agreeing to, offer to provide a copy of its source code to a neutral third party to really do the analysis instead of them doing the analysis, which to me is absurd to let the company that's being accused of something to do their own analysis, whether or not they copied it or not. So anyway, those are just some of the controversies. And so is XPeng stock a buy right now? And I'm just gonna tell you what my thought process about this stock is. Like I mentioned before, I think if I were to start entering, right, again, this is my personal belief, if I wanted to enter this stock right now, I would dollar cost average in, and I would not buy heavy until it reaches these lows down here. Now, honestly, the volume of the stock has been about the same as it was here. The cumulative phase usually is when people are scared. So people I don't think are scared yet. As you know, Alibaba bought way back here, right? Back in early August when it was like $7.50 a share, right? When it wasn't even on the market yet. They still have shares. So if this stock drops another $10 and they lose confidence all of a sudden, they could possibly sell and still be doubling, almost tripling their money. Meanwhile, you might be buying here thinking it's a good price. Again, not financial advice, just a thought. And another thing to note is you could be buying here, and this is why I dollar cost average in, is because you could be buying here and it could dip down to these levels and then level off here because it looks like there's a huge strong support here. And this could be the new, kind of the new low / new high for a little while. And if it does that, then we do have an opportunity for a rally, right? And same thing here. Even if it does that here, you wouldn't be missing out if it doesn't ever reach these levels again, right? If you're dollar cost averaging in. That's why it's always important to do that. And don't just buy big chunks just because something is on a discount. So anyway, hopefully this video brought you a ton of value. I honestly did a lot of research for you guys. I dove super deep. I hope you understand a little bit more about this company, and maybe now you have a better idea and strategy about how you're going to invest or not invest in companies like this. Especially right now, the EV sector is still hot. A lot of companies have taken a big dip. It looks very appetizing, but in all reality, it's up to you and what your risk tolerance is and what your capabilities are of, seeing the opportunity in front of you. Go ahead and make sure you smash the like button. That really helps out the YouTube algorithm. So I thank you very much for making it all the way through this episode. If you got value from this and you're like, hey, I want to see more, let's subscribe, because I noticed that about 70-80% of you that watch my videos actually aren't subscribed, and it would really mean the world to me if you guys just go down there, smash the subscribe button. And honestly, it's going to help you gain more value because you're going to actually see more videos like this that help you make more money in the future. Thank you all so much for watching. I appreciate every single one of you. And again, thank you for smashing the like button. Thank you for subscribing, and I'll see you guys in the next episode. Peace out.